Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the CEO of Dryden Gold, an exploration company focused on the discovery of high-grade gold mineralization. It's Trey Wasser. Great to have you back on the program.
Thanks, Jesse. Thanks for having me.
Well, we have to start off by discussing Liberation Day and the impact it's had on markets so far. We are starting to see a little bit of a recovery today, but markets getting decimated for a couple of trading days there. Gold taking a bit of a hit, although it held up much better than other asset classes. Silver especially taking a beating, going sub $30, now a little bit over, I think around $30 as we speak. What is your reaction to Trump's barrage of tariffs? And how do you expect gold to hold up in the long run? Should we see a continued market downturn as a result?
Wait, that could be the only question you ask me here, Jesse. We could spend the whole time on that. Uh, look, I'm from Texas, and while I can be critical and question Trump from time to time, I believe the guy he will turn out to be a genius in this whole thing. And they obviously threw a lot at the market all at once. I'm not sure, that they didn't think that better to rip the Band-Aid all off quickly. The market was certainly at a point where it could stand a pullback and was probably ready for a pullback anyway. We'll see. Well, let me just say that on the tariff front, you're already seeing that these countries are coming in now and wanting to negotiate, and that this was more a strategy. I think Bill Ackman said it the best: is that sometimes the best negotiating can be done when the other side thinks you're crazy, and the so I think this is long overdue. I mean, the U.S. Very most productive country on earth over long period of time here, but in debt to the tune of $36 trillion. You can attribute somewhere between 15 to 20 trillion of that to deficits, and you can attribute those deficits to the fact that certainly we've become more of a consuming nation, but that to trade imbalance. And unfortunately, what the mainstream media has done, who has anything Trump is bad, and they don't seem to, the whole left wing side of our liberal side of our political parties here are they can't get over the fact that that people had enough of their left wing politics and woke and diversity and everything else, and voted Trump back in. They just can't get. They still can't get over it, and they don't want to seem to acknowledge that that people want these kind of changes. So I think he will be vindicated, hopefully in the markets, possibly sooner rather than later, and that you're going to see very positive reactions in the market and a very positive outcome, with the U.S. being in a much stronger position going forward. And that's good because, something radical had to be done. And of course, the whole Doge thing and the waste cutting of waste and everything else, they've kicked and screamed about that, and yet you look at some of the stuff they've cut out, it certainly was, you scratch your head and say, we really were paying for that? So I think that's going to all work out just fine. I think that for the most part, you have the effects of tariffs has probably been really misconstrued and wrongly predicted. I do think the tariffs will slow the economy down, and maybe we're in a recession right now, and maybe it's going to get worse, and therefore maybe the market hasn't fully discounted a recession yet. But it's probably a recession like the market correction that was going to happen anyway. I'm not sure. The only thing that kept this recession from happening was in the last administration the huge amounts of deficit spending that went on, and a lot of shenanigans as far as the way that they reported employment and other things. So anyway, enough on that, Jesse. Let's talk about gold because that's really what is and to me, you can't have a better setup for gold. Gold has been going up steadily the last 2 years in the face of some bad fundamentals for gold. High real interest rates, a very strong stock market for the most of the time, a very strong dollar. I mean, everything that you would think would be negative for gold has been, and yet gold has gone up. And we won't get into all the reasons why, but I think now you have just the opposite. You have everything. You have the real interest rates coming down. You have the stock market correcting. You have this tariff situation is probably going to cause a bit of stagflation where prices aren't probably going to drop anymore, may even go up some more from this, but the economy get weaker. So a perfect setup for gold. And quite frankly, if you look at gold and gold stocks, I think you probably had on Friday about a 1 hour time frame when you could have bought Agnico Eagle on the pullback. And I mean, it literally dropped from 100 to 94 back to 103 and closed at 100 and on Friday. And now I looked at it, but this morning it was back 103, 104. The gold stocks held up very well. Gold did correct in here, but that's typical of a market crash like we saw because you had margin calls and you had people that, they had to sell on Friday. They had to sell what they could sell. And to some degree, they wanted to sell maybe some things that they had profits in, which would have been their gold stocks. But the gold stocks, I thought, held up extremely well. I still think the producers are undervalued, and I was adding to positions this morning on gold stocks.
So you spoke about gold performing well in situations that are normally negative for gold. That included high interest rates. We have now seen Trump come out on social media asking Jerome Powell to lower rates. He said this would be a perfect time for Fed Chairman Jerome Powell to cut interest rates. He is always late, but could now change his image and quickly. Cut interest rates, Jerome. This is all in caps lock, by the way. Cut interest rates, Jerome, and stop playing politics. Now, interesting to see a president come out on social media to try to pressure Jerome Powell to cut rates. However, if we do see rate cuts up ahead, do you think that could then provide more fuel for the gold price? Because that's traditionally a metric which is favorable for gold.
Absolutely. I mean, I think and again, seeing a lot of volatility the last few days in especially the 10-year bond, but and you have the problem here where China seems to be the big holdout, and I think if there's going to be a tariff war in here, I think everybody else is going to play ball with Trump on these tariffs. I think China may stand their ground, and about the only card they have to play is to sell, be liquidating their treasuries and putting pressure on interest rates. But as I said, I think that the effect of these tariffs will be recessionary. I personally think we've kind of been teetering on that recession, and really a lot of the indicators here the last 30 days have flipped pointing towards recession. So I think we are looking at a slowdown here, and I think it is a time when the Fed can lower rates. Where will they do that in the face of what might be sticky inflation? I don't know, but that's Trump. I mean, he did it in his first term. He did it in between his terms. He's not afraid to go public, and as much as the Fed likes to claim that they're independent, they are very political. So I I think, I think the interest rate, the interest rates will come down here mainly because of the of a weaker economy, and certainly, on the inflation side, the one other thing, and very positive for the gold stocks, by the way, is this recent drop in the oil prices of about $11 in crude oil over the last week. So I think that's a big input inflation, and I think some of the effects of inflationary prices from the tariffs will be offset with the lower oil prices, and I think the profits for the gold stocks. I mean, again, that's their biggest input cost, and one of the things we follow for gold stocks valuations is the uh, gold oil ratio, and that has just spiked to levels that we haven't seen in many years, and that's very favorable when that spikes and the price of gold is going up and the price of oil is going down.
Yeah, very good points there. And a sad reminder, my oil equities, I'm still reeling from the beating they've taken over the last couple of days. Still bullish oil long term, but that's a very interesting point. The fact that the input cost, the energy input cost into mining is largely driven by the price of oil. So we could see bigger margins should WTI crude remain around these levels. I want to talk about the possibility of revaluating the U.S. gold reserves. This is something that's been coming up recently, either marking them to market. I believe they're $42.22 on the Fed's balance sheet right now. So either marking them to the current price or revaluing them at an even higher price to put more there on the balance sheet. What are your thoughts? Is this feasible? Is this all just hyperbole in the media? Could this be done? And what would the effects of a gold revaluation be, both good and bad?
Well, you know, this is, I'll tell you, I'm maybe not super qualified it's not something I've really looked at a lot. I think it's more of just a balance sheet item. It makes the balance sheet look stronger than it is. Of course, I mean, we get into the idea that if they're going to revalue, they probably have to prove it's all there. And there's, those rumors and the innuendo about whether all the gold is in Fort Knox, and I believe it is. So I'm not sure it has a lot to do with it. I don't think I don't think it have an effect. I see where it have an effect on the price, because I think it would strictly be an accounting number change on the balance sheet of the Fed.
Right. So nothing that significant as it's being made out to be. Like it, even revaluing, marking the gold to market would be a drop in the bucket if they're trying to use that to offset debt and deficits, right?
Well, the debt's still there. I mean, the balance sheet looks better, but the debt is still there, and it still has to be serviced. And that's the big danger we have now. If we don't get this debt under control, and getting debt under control, the first thing you have to do to get debt under control, whether you're in your household or for the federal government, is you have to stop spending so much and stop adding to the debt, right? I mean, hopefully you want to find a way to start reducing the debt, but the first thing you have to do is the first step is stop it increasing. And I think with the changes they're making, the savings from the Doge efforts and the effects of these tariffs, as far as money coming in and stopping these the trade deficits. I mean, that's the first step. Then we'll worry about how we get it down. But meanwhile, we're looking at these interest rates, at debt service, a lot of which is got to be refinanced in the next few years, a big chunk in the next 12 months. So it that won't change by revaluing the amount of gold, unless they intended to sell some of the gold to to pay off the deficits.
Well, let's pivot now to discussing Dryden Gold and how you fit into the picture when it comes to the gold markets. We do have some news hot off the press I'm going to get to in just a moment, but before we go there, the last time you were on the show was last year in October. Maybe you could start by giving an overview of the company for those new viewers to the show and any updates on progress you've made that you think it's important to discuss in that context.
Okay, yeah, Dryden Gold is a fairly new company. We came public a year ago, January, at approximately the same price where we are today. So, but we have we're able to last year to raise $5 million on our IPO or RTO, another 5 million in October, and then in December we got a strategic investment from Centerra Gold for 3.4 million. So we were able to raise money last year in a very tough market for juniors, which we have still, even though we've seen new highs in a lot of the producing gold stocks, we haven't really seen it flow down yet to the junior space. But the first stage, I mean, again, when you're building these things, these companies, like we started this thing from scratch in early 2022. I mean, literally 4 of us kicked in 10 grand a piece to start this and start accumulating this property. And the property itself, it's in Northwest Ontario. It's just almost incredible that this property is so underexplored because the Trans-Canada Highway runs right through it. Highway 502 runs right through the middle of it. It's it's a very underexplored Archean lode gold system. Looks very much like Red Lake, similar to Great Bear. Probably I'd draw more, similar to Red Lake, but we've got a very strategic land package on a major deformation zone, which has been compared to the Porcupine-Dester Fault in Timmins. And we have 50 kilometers of strike with high-grade gold occurrences from top to bottom. So we've just been really scratching the surface. Last year was our first year of exploration. But we've got a team that is made up of our president, Maura Kolb, who led the exploration team at Red Lake for 5 years. And her number 2 there, Anna Hicken, is our VP of X. And so they really understand these systems. And, we've done a really good job of kind of expanding on this and expanding the footprint of the mineralization. And now more recently, late last year and early this year, and with the news this morning, we've been showing the potential at depth because while we have high-grade gold occurrences, and the previous operator, we're not just talking high-grade, Jesse. The previous operator drilled 53,000 grams per ton over a half a meter in the quartz vein on the patented claims here, near where we're drilling now. And so, extremely high grade, but all over this property. It's a whole district play. It's about over 700 square kilometers, 70,000 hectares. And we've just got targets on it all over the place. So, that's why we got the strategic investment from Centerra. But along with Centerra, our largest shareholder is Alamos Gold. We also have, our lead order on the RTO was Rob McEwen, who used to own this property years ago and never really explored it. And also, involved Bob Quartermain's involved, Eric Sprott, Europac Gold Fund, Delbrook Capital, Medalist Capital. We've got a who's who list of shareholders who have all, joined in on or invested in this property at the different stages in these different deals I talked about last year, because of the quality of the property and the team.
Well, let's hone in on some recent news. A couple news items I want to touch on. The first one is hot off the press, literally being released this morning. Dryden Gold reports a new discovery in deep drilling at Elora with significant visible gold. Talk to us about what you found there and what it means for the company moving forward.
Well, it really is a spectacular intercept. We haven't assayed it yet, but we've been focusing on this Elora structure because it is in sheared basalts, disseminated sulfide ore that really looks similar to what the high grade, the Bonanza grades at Red Lake. And one of there's a few things you need in a system like this. These Archean low gold systems is one, that major structure, and I talked about that before. We're on that Manitou to Norwich, but then you have these secondary cross-cutting structures that were also gold bearing, and in our case, both of these D1 and D2 events were high grade gold events. So you're seeing high grade gold on the cross structures alone and on the deformation zone alone, but where they intercept, that's where we're seeing the spectacular grades. And the other thing we have is a regional folding of the rock there, again, very much like Red Lake. And it's in this regional folding too and the intercepts where the folding makes hinges, if you will, and that's where and when you look at the core from this recent discovery, you can really see the folding of the quartz veins in this in the basalts, and you can see we talk about that in the fold hinge, but there's a piece of the core where you can look at it from the end where it's broken, and you can literally see the folded where it's right in the fold of that quartz vein. So very exciting. We made this discovery because we've been drilling the Elora structure with a lot of success here last year, but we've had to drill it from off of our patented claims, which are about 150 kilometers to the south. And so we've been drilling it at a kind of an odd angle. This is structures you'd like to be drilling pretty much perpendicular. And we recently received the patent so that we could step up to the north on this structure. And that's why we are hitting this. It's a hanging wall structure. It sits about 80 meters away from the main structure we've been drilling. And when we were drilling at an angle from the patented claims, we were kind of missing it and just cutting the edge of it. And now that we're drilling straight through it, we're starting to see that it could be potentially a real big addition to the Elora structure. And now we also can go further to the north, and that's where we have some very exciting targets. Two historic mines, one where we're going to try and get to here. In fact, they're putting the pad together right now where the old Laurentian mine was. And this was historically mined in the early 1900s. Laurentian was the highest producing mine in the camp. And all of the mines in this camp just started at surface, and they followed the vein down 150, 200 meters. And when they hit the water table, they couldn't follow. They gave up. And but the Laurentian mined at right at a half an ounce. So it was a very high grade mine, produced more than any other mine in the camp, but only down to 140 meters. So, we're now drilling. This recent intercept was a hole, the hanging wall intercept, that high grade from this morning's press release was probably at about 260, 270 meters true depth. And that was on a hole that has intercepted the main structure at about 400 meters. So we're down at depths now, and we will drill at least on that structure to 500, 550 meters. And if we continue to hit this high grade at depth, again, you look at Red Lake or especially, it didn't, the Campbell and Dickinson mines there, they did not even get interesting till you got down to 500 meters. They didn't have the kind of high grade near surface that we have. And yet, we're starting to see this kind of mineralization at depth. And, again, if you look at us drilling even, 400 meters, whether you look at Kirkland or Timmins or Red Lake, uh, they're still mining those at plus or minus 2 kilometers. So these are very deep systems, and we believe this is the type of system we're in.
And on March 31st, you also released news that Dryden has received drill permits and announced exploration plans for the Sheridan property. Walk us through what those plans are.
Okay, so Sheridan is to the south of the Gold Rock camp. We really have three main areas that we're focused on here. The Gold Rock camp, where the patented claims are and where we've been doing the drilling. We've got an extension that we mapped last summer from where we're drilling now, about 2 kilometers to the north, that we call Mud Lake, and the permit that we announced for Goldcorp extends up that far. So we'll be extending on, as I said, up to Laurentian and then even further north on Gold Rock. And then to the south, at the very south end of our property, is a property called Sheridan. And we added earlier this year to that position after doing some work down there last year. And that we have grab samples down there as high as 617 grams per ton, several over 100 grams per ton. The previous operator, they did some drilling there, and most of the drilling they did, we found, we analyzed their core and relogged it. And they did hit holes, as high as 15, half an ounce over 5.5 meters, but only a couple of holes. All the rest of the holes, they really had the wrong orientation. So our team has, we really follow the science on these things, and our team they're so experienced in these kind of systems, and that we will go down there to Sheridan. We're going to add a second drill rig starting in June, and that'll be down on some of these very high grade structures. I mean, again, you don't see 600 grams per ton gold on grab samples at surface very often anywhere. And then especially then around it is 100. I mean, usually you're looking at grab samples of 6 grams per ton surrounded by 1 gram stuff and get excited. I mean, we're talking about 600 surrounded by 100. So we're excited to get down there and put some holes in. And then, I guess the third area that we'll be focusing on this year, and you'll start to hear about, is Hinman. Hinman is off to the east. It's an area that was clear cut by the forestry here recently in the last 5 or so years. And so it's never really been explored. It was very heavily forested. Now it's got nothing on it. And they not only took off all the trees, but all the cover. Jesse, the Trans-Canada Highway runs through this property. And yet it's never. And so we flew a drone over it. And after they've, stripped off all the cover and the trees, and we're seeing all these structures sticking out over there. So we did the geophysics on Hinman and came up with 9 targets. We were able to go out this summer and map and test 3 of those, and got ground samples as high as 34 grams per ton. This year we'll go test the rest of those samples over there. And, these are 3 areas that several, they're pretty far apart. I mean, like over to Hinman is probably 30, 40 kilometers from Gold Rock, and down to Sheridan is about 10 to 15 from the south end of Gold Rock. So, our goal this year is to prove to the market that at Gold Rock, we really are in a Archean low gold system, and a lot of potential there. And 60% of our exploration budget will go there. But this is a district scale play. And the reason that Centerra is interested, and Alamos, and all of the other, major mid-tier producers that are, talking to us and signing CAs and coming out to site and everything, all are interested because this is a big property with a lot of potential, and the kind of thing that a major or mid-tier, can spend decades working on. It's not one project. In other words, if we prove to the market that we're in the next Red Lake camp, we don't just own a project, Jesse. We own the whole frickin' camp.
Right. And so much going on at the company here. I love that you guys are moving forward in such an intentional way, very clear about the direction you're headed in. Is there anything that we haven't yet discussed or anything in particular that you want to emphasize to potential shareholders of Dryden Gold?
I think I've said it there, that basically we've got a great property, we've got a great team. It's high grade gold that everyone's looking for. The infrastructure is incredible. We have no issues with First Nations. We're negotiating with them on long term deals. But the fact that we're getting these permits as quickly as we are, speaks to the fact that the First Nations we've got good relationships and they've been involved in all of our drilling so far and blessing our drill pads and that kind of thing. So, we've got great shareholders. So as long as we perform, we're not going to have problems in this market raising money. And yet we're trading today. Now it's up, the stock's up a little bit today, I see on this news, as it should be, but we're still trading below the RTO price of 15 cents. The Centerra investment in December was at 17 cents. The optionality in Dryden Gold as an investment here, where we're currently trading around 20 million market cap, we think this, this has the potential to be one of the darlings in the exploration market. And even when you are in a bad market, as we've been in the last couple of years, you'll always have a few. Everybody's looking for that new high grade story, and we expect to be that story here this year.
Fantastic. Well, I'll put a link in the description below to the Dryden Gold website, as well as social media for people who want to follow along with the company. Trey, it's always a blast talking with you. Thank you so much for coming on again and sharing your knowledge with the audience.
Okay, thanks, Jesse.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.